Oops. Here we go. I wanted to get this started exactly at 3 o'clock, and so here we are. It is 3 o'clock. Good afternoon, everybody. Thank you all for coming. I'm going to show you some things today that I haven't shown yet. Show you some things. One thing I gave you a peek at yesterday. One thing I kind of stumbled into last week that I didn't really address any further. But let's just start out with this. Welcome, everyone. Good afternoon. Today is Wednesday, the 26th day of June 2024. I might start doing these on Wednesdays now instead of on Tuesdays. You know, I was doing them every Tuesday at 3 o'clock. I might shift it to Wednesday at 3 o'clock. All right, we'll see how things go. But I know I have another thing that's going to be happening on a regular basis on Tuesdays. So it might turn into Wednesdays, every Wednesday at 3 o'clock. Anyway, welcome to TargetView Trades. If you have not been to our website, go here to targetviewtrades.com. For anybody that's watching right now, if you don't know what it costs, let me just start right here at the beginning and say it's $25 a week to get started. There's a 3-day free trial, $25 a week to get started, or $90 a month. That's 10% discount off of that. There's a 3-day trial for that, or you can pay the annual. That's about a 20% discount off of this. But I don't give a trial for that because by the time you pay for the annual, you've probably already done the trial, or done that for a week or a month or 2 months, or done this for a month or 2 months. By the time you upgrade to the annual, it's up to you. You could just jump right in at the annual if you want. Anyway, those are the prices. All right, those are the prices right now. Now, there's a lot of things that are going on, so I don't know those prices are going to stay that way forever. But that, if you join now, that's the price you're locked in at. Okay. Now, let's just look over here. The thing that I was going to show you today, well, one of the things I was going to show you was, last week I did the thing with the HEIKEN ASHI bars. And I was wondering with the HEIKEN ASHI bars, if I created, the formulas that I used to create the TV trades themselves, to create all the signals for the TV trades. By the way, if you don't have TV trades and you give me your login ID for TradingView, you have to have TradingView to use TV trades. Your login ID is going to be what you're logged in as. If you hover over this thing, like yours might just be an initial or something like that. If you hover over this, I'm logged in as TV trades. That's what I need from you to enable the indicators for you. Okay. Now, yesterday I sent out a survey to people who were in the webinar yesterday, and the majority of the people that were coming to the webinar yesterday wanted to see futures. All right. Now, this works great for futures. It works great for everything. I originally created it for stocks, not so much on a futures time frame, but on a stock time frame, like a 30-minute or 5-minute or a daily for stocks and things that you're going to hold, for a long period of time. But it works great with everything. All right, and I'll get to that in just a minute. But if you're going to use it for futures, you have to have futures data. All right, real-time data for futures. If you sign up for TradingView right now, you're not going to get real-time futures data. All right, it's $7 a month for the futures data. To get that, you got to click here, go to TV trades, go to accounts and billing like this. Hang on, let me hit save on this thing over here before I do that. You go to accounts and billing, and I'll show you how to do this. I just want to get all this out of the way right away. All right, the first couple of minutes we'll get all this junk out of the way, and then we'll be able to move on with what I want to do. I didn't finish everything I wanted to do yesterday. This is what you need right here. All right, it's $7 a month for real-time CME, CBOT, COMEX, and NYMEX data. That's what you need to get. Okay, $7. It's real-time data, and that's all you need. You got to have that. If you try to trade without that, you'll have to use the DOM that's attached to TradingView to trade because it's going to be using the same delayed data in the DOM. All right. If you try to trade on another DOM while using delayed data on your chart, you're going to fail miserably. Believe it or not, we had somebody that did that. You're going to fail miserably. It's not the program's fault that it doesn't work when you do that. Okay. So once you do all that and you give me all that information, to apply to the TV trades, all you have to do is go here to indicators, go to your invite only. You're going to have one thing in here. I have a whole bunch of things because I have a whole bunch of things. But click TV trades one time. When you do that, it's going to put it on with only the longs enabled. Only these longs right here enabled. All right, it doesn't have any mid-trend trades enabled. It doesn't have any shorts enabled. It doesn't have any of that. And the reason for that is because I created this for things like I created it more for stocks than I did for the smaller time frame stuff. So you would just get this right here, and usually people who are buying stocks are only interested in buying stocks. I mean, they're not interested so much in selling, unless you're trading options on stocks. But you can see it gives great opportunities here if you're just buying stocks. All right, this is just NVIDIA. It's just randomly chosen NVIDIA. It could be anything, any stock you want to look at. CRWD, that's CrowdStrike, I think, right? I have no idea what any of these look like right now, but it's just going to give you long indications when you have good long indications. I don't know why this isn't giving us any more data than this, but well, here it is. It's giving a little more data now. It's just going to give you long indications when you have good long indications, okay? And here's a company that used to be near and dear to me until I quit and started trading futures for a living. But you can see it giving you great opportunities to enter again and again and again. Now, a lot of you guys that are in here have been following me for a long time, and you know that I trade futures every day. And so I really didn't design it for futures, but it works great with futures, all right? And you all know, everybody that's been following me for any length of time, you know that I'm a scalper and that I like to get in and out of trades really quickly. I don't like to spend a lot of time in a trade. I don't like to, I like to manage my risk aggressively and be in and out as quickly as possible. So, that's a little bit of the evolution right there of the TV trades, okay? A little bit of it. And you can see we're only showing long trades right here. Now, this is a 4-tick range. I like range bars. Am I speaking? Yes. Let me respond to Dennis. Yes, everyone else hears me. What's the best time frame for the ES? 9:30 to 10:30. I trade the ES from 9:30 to 11:30 every day. That's a really good time frame. It used to be later on in the afternoon too. I used to like to trade from 3 to 4, but that's all changed a little bit now since they adjusted the hours for the exchanges and all that stuff. The question was, what's the best time to trade for the ES? 9:30 to 10:30. 9:30 to 10:30 usually works pretty well for me, but a lot of times it's really flat. It depends, and it depends what time frame you're using. You're talking about time of day. Now, what time frame are you using? Are you using like a 5-minute chart? Are you using a 30-minute chart? Are you using a 2-minute chart, a 1-minute chart? Are you using range bars? The 4 range, okay, great. The 4 range between 9:30 and 10 will usually work great. 9:30 and 10:30, I mean. 9:30 and 10:30 will usually work great, Casey. And so, you see I have a 4 range right here on the Russell. Now, the Russell's only $5 a tick, right? So on this, with a 4 range, I'm only risking 6 ticks. On mid-trend trades, I'm only risking 6 ticks. All right, now I haven't put the mid-trend trade on. When you get one of these arrows right here, by default, the blue long arrows, when you get one of those, the stop is going to be the low of the bar prior to the trigger bar. All right, that's where your stop is going to be. So most of the time, it's going to be 2 bar lengths, roughly 2 bar lengths. Okay, so if you're on a 4 range, it's going to be an 8-tick stop, max, 8-tick stop. Okay, unless you have like a gap, it'll be a max 8-tick stop. And you can see right here, the last trigger right here, this one that just triggered right here, the stop on this one is 7 ticks. All right, 7 ticks. That's because this bar didn't close at the top, or the way it came together. The low of this bar is 1 tick higher than 4 ticks below this bar. So it's 7 ticks is what it worked out to be. So in this case right here, you just got this blue arrow. This is real time. You got your blue arrow, you'd be going long right now. I mean, I could go long right now. Let me see if I got any DOMs open over here. I do somewhere, I know I do. Alright, I do have a DOM open. So here, I'm going long right now. Hang on, I'm trying to go long right now. I didn't get filled yet. Now, I still have everything going from this morning, so I have 18 contracts on right now. Okay, now it should fill me right there. It just did fill me right there. Oops. And it messed up. The strategy messed up, but my stop in here is going to be down here, right? What does it say my stop needs to be? My stop needs to be at 34.8. 34.8. So my stop is saying it needs to be right here. Now I got a better entry, so I'm going to bump my stop right there. All right. I got a better entry than the actual entry. The actual entry was right up here. So this is a real-time trade right here, okay? Now, the 18 ticks, the 18 contracts is something that, it's been, from what I do in the morning session, that's why I'm at 18 contracts. This one here is going to stop out. It just did stop out. And that happens. That's okay. Now, what I wanted, this is just part of leading me into the next thing. I don't have shorts showing in here right now. Okay, so that one stopped me out. The stop was right there where it should have been, and it stopped me out like it should have. Limited risk on every trade, right? Every trade, you know ahead of time how much your risk is going to be, and it's limited risk the whole time, every time. So this should move up. It should keep going up. Now, with futures, you probably want to trade both sides of things. You don't want to just trade the longs. So you just check this box right here, and it's going to put on the shorts. All right. Now, you see with futures, you have times like this where it flips back and forth a lot like that. So you want to stick with one side, right? You want to have kind of a bias and trade with a bias. To do that, you check this box right here. That's going to give you a bias. All right. So that's going to eliminate some of the trades, like right in here. You're only going to have long trades when it's above whatever you set that to. This is a simple moving average right here. The bias level is simple moving average. So you don't have to have anything on the charts. I'm going to show you some things today that they're going to show on the charts. They're things that I'm working on. They're going to show on the charts, but I don't want. The whole idea is that you don't have things on the charts. Like this right here is a 233 simple moving average. So if I put one of those on the chart for you, go here to technicals, and I go right here to simple moving average simple, and I stick it on the chart, and I make it a 233. It's going to give you long trades above it, and it's going to give you short trades below it, right? You know that. You don't have to see it to know that, okay? And if you make that something else, like Rico, who I said hello to earlier, I know he likes to use a 50 on that. Right? He likes to use a 50 on that. And that's going to give you different opportunities. It's going to give you different looks. It's going to give you long trades above it and short trades below it. Okay? And that's pretty much the way that works. You don't need to have it on the chart. You don't need to see that. Because when you see things like that is when you start to make decisions on your own. You start to make game time decisions. And that's what I want to. I want to remove all of those game time decisions that you're going to be making. Alright, that's where people start to make mistakes and they start to be inconsistent. Right? The only way you're going to have consistent results is to take consistent action. And the only way you're going to take consistent action is if you have limited opportunities. Right? Not limited opportunities to place trades, but limited decisions to make when placing a trade. You get an arrow that says go long, you go long. You get an arrow that says go short, you go short. It's as simple as that, right? Now this is with the 50 on, so if I take that 50 off and I make it the 233 again, you're probably not going to, oh, it is a 233. Okay, well, occasionally, because it was going flat right here, the 233 moving average was flat right here, so you're occasionally going to get something like that, where it's going to give you a trade in both directions, one right after the other. It doesn't happen very often when you have the bias on. But, nevertheless, if you go back here to the rest of today, I was killing it earlier today. We'll just let this play out. Alright, this is a valid trade, and we're just going to let it play out. Alright, I am short. Here, I did take this. Here it is, I am short. I need to move my stop, though. My stop doesn't need to be that big. That was from the morning session. Now, if you put the bias back on there, right, the one thing that I got out of people was that there were times when you'd get into a trade and you might have like a short trade here, and if you miss that, you don't get another one until way over here. And if you miss that, well, you don't get another one until way over here. Or, if you missed a long trade, like on a larger time frame, particularly if you're doing it on a larger time frame than a 4 range, like let's say you're doing it on a 15 range, and you missed this short here, you don't get another one until, that was at 4 a.m., you don't get another one here until 9:46. But if you miss this one here at 10:36, you don't get another one until 3 o'clock. Whether that's better or worse, nevertheless, you don't get the trade. So that prompted me to create the mid-trend trade. Hang on, I feel like I'm missing something here. I am definitely missing something here. Hang on. Uh-oh. Hold it. You guys can still hear me, right? Dwayne, can you still hear me? Because I'm not showing I have the meeting running anymore. Yes, okay. Well, I'm not showing I have the meeting even running anymore. So I can't see your questions. That's my issue right now. Hold on, I'm trying to find out where that went. Here it is. Okay, I found it. Alright. There, okay, alright. Good, I found it. It was lost. I hate the way that they changed that. Go to webinar. It used to be, the stuff that I do in the morning, because we've been using that version of GoToWebinar for over a decade, they didn't force us to do the upgrade to the latest format, and the latest format is just a mess. It's awful. I don't like it. But anyway, it's neither here nor there. I can see all the questions again, so thank you for that. Are these signals based on one indicator? These signals are based on math. They're not based on one indicator, Casey. Okay, they're based on math. Now, indicators are also based on math, but there's not one thing that you see in here. There's not one thing that you can put on a chart that is going to give you anything like this. All right, this is all based on math, all stuff that I figured out. And where I was going a few minutes ago was, if you're on a larger time frame and you get a short like this, but you miss this one, you're not going to get another one for a long time because you don't have anything in between. So people were asking me for an opportunity to trade in between, and that's where I created the mid-trend trade. Now the mid-trend trade is this guy right here. Click on that, and that's going to give you these opportunities in between. Right? Now, the mid-trend trade, if you have a little black arrow like that before the trade trigger, that's an alert telling you that the next bar is probably going to be a trade. All right, so you can get ready for it. If you have a little black arrow, it doesn't happen on every one, but it happens on a lot of them. All right, you're going to get those little black arrows before the trade triggers to tell you that the next bar could be a trigger. Now, sometimes you're just going to get the arrow, and that's your trigger. All right. Now, the deal with the mid-trend trade and the table, right, the targets and all that, the mid-trend trades don't change anything in here because this already establishes the targets based upon, if we go all the way back here, okay, this is all based upon this red arrow right here. All right, so the short entry was 32.5 right here. Right here is what it says, 32.5, and it went down a little bit, but then it ran back up. And now it's gone down again. Now this is on the 15 range. It's not the 4 range that we were looking at a few minutes ago. Okay. So you're not going to get any more targets other than this. If you get a mid-trend trade on the short side, you use these targets. All right. And you can actually put lines on those targets if you want to. You can put the lines on the targets so you can see where they are below you. Okay, so if you get another mid-trend trade over here on the short side, you can see this is the target, and this is next, and that's the next. And you can put up to 5 targets on if you want to. Okay, now I feel like I'm jumping all over the place, but I want to show you all the features, and then get into everything else. Now, slow me down if I go too fast, because I have a tendency to go really fast. And just say so. Just tell me. You're talking too fast. I know people don't understand range bars. They need to understand range bars, though. The range bars are awesome. But the 5-minute is popular. That's true. Dwayne was just telling me. And you can look at the 5-minute. Everything works. Whatever time frame you want to put it on. Like here's a 5-minute short back here. Okay. And so on the 5-minute short, your stop would have been right here. So it pulled back to the stop, but it ran down. This one right here, you obviously would have got stopped out on that. But you can put it on whatever you want. I don't like to trade on a 5-minute. One of the things that this webinar was going to be about was multiple time frames, though. So I want to go back here to my smaller time frame that I like to work with. All right, in my little world over here, the smaller time frame, and I want to have it on a bias, so I'm only trading in one direction. But let me show you one more thing. Well, first let me bump my stop to break even. And I've been short since this last arrow over here. Here, stops at break even right now. The first target is right here. Next target is right there. And next target is right there. Okay. The thing that I wanted to show you. One, the risk reward, I don't have the risk reward in the table right here. You can put the risk reward on. Let me explain the risk reward to you. Alright, you want this number to be greater than 1, if at all possible, greater than 1. And what that's showing you is the reward divided by the risk. The reward being the difference between your entry and the first target divided by the entry and the stop. Okay, it's reward divided by the risk. So you want that number to be greater than 1. Alright, you want the risk to go into the reward multiple times, if possible. So your risk is smaller than your reward. That's the ideal situation. Okay, there are going to be times where the first target is going to be really close to the trigger, because it's just the way price action worked out. So in that case, it's going to be a little less than 1. But usually you want that to be greater than 1 or greater. Okay, just wanted to explain the risk reward to you. So let's go back to the beginning. You get your chart. You like to trade in a time frame. Like Casey, you just had a 2-minute. Okay, yesterday, there was a fellow yesterday, Kevin. Kevin wanted to look at a 2-minute. Here's the 2-minute. Okay. Now when you look at the 2-minute, you see price ran up here, and then it ran down, and it had pullbacks on the way down, and then it got choppy right here. Ran up, came back down, probably gave a trade right there. This is a head, this is a shoulder, this is another shoulder building over here, so it's probably going to be choppy over here for a little bit on a 2-minute. We don't have anything on here yet, but if you just come here, you would invite only, TV trades one time, it's only going to put the longs on. So you had a long right here, you had one long. Well, you had one there, you had one there, you had one there, and in the pre-market you had a couple. But since the market's opened up, you had 1, 2, 3 winning longs. Alright, and if you put the shorts on, just the default shorts, I don't know what's going to happen with that. It doesn't look like it gave you one right here that didn't go anywhere. It gave you this one that did go a little bit, this one that didn't go anywhere, and this was all pre-market. Okay. If you put the bias on that, it might have eliminated it, just eliminated that long. Yeah, eliminated pretty much all the longs and left the shorts on. Okay. Now, if you take the bias off and you put the mid-trend trade on, you're probably going to get a little more action in here, right here, and here, and here, and here, and here. Now, the deal with the mid-trend trades, on the range bars, particularly on the range bars, the mid-trend trades should be the pivot bar, okay? They should be the pivot bar. So your stop only has to be a little bit beyond the bar that triggered. But if it's not on a range bar, if you're doing it on like a 2-minute bar like this one right here, it's going to be above the prior swing, which in this case would be right here is where your stop would have to be. In this case, your stop would have to be above the pivot bar, right here above the pivot bar. But over here, you know, it'd have to be below this bar right in here is where it'd have to be. Okay. And so on this one, your entry was down here, and it ran all the way up to here, and then it pulled back. But your stop was really small on that. In that case. Okay. That's how that would work, Casey. Okay. Can we look at the GC? You asked that yesterday, didn't you too, Mike? Let's look at the GC. What time frame do you want to look at it on? I'm sorry I didn't get to it yesterday, but the M is not the right contract. Which GC should we be looking at? I'll just do one exclamation. That'll be the front contract. Okay, so here's this on a 2-minute, but I wouldn't look at it on a 2-minute. The gold, I use range bars all the time. So on the gold, in the morning, I would use a 7 range. Okay, so I'll just put on a 7 range and see how that looks. I can't see everything that's coming up. Oh, GC, the Q contract. Thanks, Dwayne. Hang on, let me put Telegram up over here on this side so I can see stuff that's coming up on that too. Okay. So this is the GC, and this is on a 7 range. So on a 7 range, on a mid-trend trade, your stop's going to have to be 8 or 9 ticks. Okay. But right here, you had a great short right there, great long there, a nice long there, a nice short there. This long right here didn't really go that far, probably enough to get your stop to break even. This right here was a nice long, short. This one didn't go anywhere. I mean, It's good stuff, right? You can put it on anything that you want. And this, I believe, we don't have the bias on, so if you put the bias on, then we'll get rid of some of this back and forth in here and keep you going on one side. Now, part of the reason I wanted to do the webinar today was to show you the larger time frame. Now, that's going to be some pretty cool stuff when I show you that, I think, in a minute. I think you guys are going to like that. What's the best setting? Well, it depends how much you want to risk per trade, right? GC is 10 bucks a tick, 10 bucks a tick per contract. So how much do you want to risk on every trade? You know, that's what you have to ask yourself. Do you like to scalp? What kind of a trader are you? You got to know those things before you choose any of this stuff. Do you like to sit in a trade? Do you like to put a trade on and walk away and come back and look at it in 5 minutes? Or do you like to put a trade on and be done with it in a minute like I do? You know, watch it all the way through. You know, I have the hardest time putting a trade on and walking away from it. But it depends who you are as a trader. You know, the stuff that I do in the morning, that I've been doing in the morning for over a decade, is scalping. I get in there and I scalp every day. And you know, this spreadsheet that I have right here, this goes back to January 2nd of 2013 with my daily results from what I do in the morning. But that's because I'm a scalper. All right, that's not using this. That's using the stuff that I do in the morning. My style. Okay, well, when I did, and I can show you in here. If you look at this, if you go back a few months when I was trading gold more often, it was before I had the YM. Here we have gold over here. Right here, we're trading a little bit of gold in the mornings right in here. See, when I was trading gold back in there, I would trade it on a 7-tick range with a 10-tick stop. So my stop was $100 a contract for every trade that I put on. That's in close position in 10 minutes. So usually my positions don't last more than 10 minutes. They don't last more than 5 minutes. They're usually like 2 with what I do in the morning. And and with this stuff, what I was doing, what I was showing you on the 4-tick range, you could do this on the 4-tick range too. The things you can't do on the 4-tick range are things that are really volatile, like the NQ. The ES, that spreadsheet that I showed you, the first 10 years of that spreadsheet up to 2023, we traded on the 4-tick range on all the markets pretty much for all those years. That's why I kind of liked it. And then it got crazy when Ukraine and Russia started their stuff in 2022. And the markets got crazy, so I upped the time frame, trying to keep the risk small, and the risk meaning how big the stop had to be. But I bumped the time frame up to make it more tradable, so it wasn't jumping around the 4-tick range so fast. But things have settled down quite a bit, so now I can go back to the 4-tick range. And Casey, you wanted to see the 4-tick range on the ES at 9:30 in the morning. I mean, I'll show you in just a second, but this is what this looks like on a 7 range. You could trade this on a 4 range too, at 10 bucks a tick. A 4 range on the gold. You'll see in a second here. So you have some great opportunities. Great opportunities. Again and again and again. Now, clearly I'm not cherry picking any of this. You guys are telling me what you want to see, and we're just going to see it, right? It works on every time frame, on every market, really. You can put it on whatever you want and adjust it so that you are comfortable with it where it is. Like, in here, if you want to adjust the bias so that it gives you more trades or less trades, just change that number. The bigger number is going to give you more trades on one side and less trades on the other. The smaller number is going to give you more trades overall. The number of targets, that's what's showing right in here, guys. This right here, number of targets, is what's showing in there. This table, you can move it here, 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 up here, where it is, or right here in the middle. There's 9 places you can put that table, and you determine that between these 2 things right here. I just want to finish going through the stuff that you actually have available to you in here. And then I want to show you what I really started the webinar for. I never got around to it yesterday. But in here, the style stuff, you can change things around in here if you want to. The colors and all that, you can change all that around in here if you want to. But this is gold on a 4 range. Now, on a 4 range, like the mid-trend trades, your stop's going to be probably 6 ticks. Alright? But you're going to be bumping it to break even on a 4 range. Probably after 3 or 4 ticks, you're going to go to break even and then start locking in profit. On the actual trend change one, the blue ones and the red ones, on those your stop's going to be a little bit bigger. The maximum that it's going to be on a 4 range would be 8 ticks. Okay, but there will be times where it's less. But you see, if you're just doing those, you're just doing the blue ones and the red ones, I mean, it works great. Again and again and again, just consistently profitable again and again and again, and that's what you need, right? So I covered all that. I wanted to show Casey the ES. I thought you watched this before, Casey, but we'll just do the SU contract on a 4 range between 9 and 9:30. And I believe today in the room in the morning we didn't have anything on the ES, did we? No, we had one 12-tick trade on the ES this morning. But here between 9 and 9:30, the ES was, it was a mess between 9 and 9. I mean 9:30 and 9:30 and 11:30 is what I mean. Not 9 and 9:30. The first trade right here was enough to get the goal for the day, and then you should have stopped. But there was a good trade right there right at the beginning, and this is on a 4 range. Okay, now let's see. Do I have the bias on here? I believe I do, right? Yeah, I have the bias on here. So you had the mid-trend trade here that didn't really go anywhere. You had another short here that didn't go anywhere, a short here that didn't go anywhere. You know, I'm going to say this. If you get a trade that doesn't go anywhere and it doesn't continue the trend and you don't have a trend, all of these trades are going to be with the trend. All right? Except maybe the first one. But if you get one that does not continue the trend, when I say continue the trend, I mean it goes and continues in the direction that you expect it to go. Don't take another one. Let it figure out what it's doing. Now, most of the time you're not going to have that issue, but sometimes you will. And you know, the ES was a mess today. I'm pretty sure we were in a no trade zone the whole morning session on the ES, or most of the morning session. No trade zone is what we call when the markets are really flat, like all this garbage right here and this. That's what it looks like, Casey. Okay, it gave a short. The last short it gave was back here, and that went about 6 ticks into profit. All right. ES scalper in and out. What time frame is best? In the morning, I use the 7-tick range. I like the 4-tick range. Using this stuff in the morning, I like the 4-tick range on the ES. I like the 4-tick range on the Russell. I really like the Russell. I've taken a real liking to the Russell lately, more than the ES, because the Russell moves around better than the ES does, and it doesn't move so much like the NQ that it's not tradable. So I just trade, you know, more contracts on the Russell is what I basically do, and make it, you know, more per tick. Now, let's go here again to the Russell. Right, this was my little example, my little sample thing here. Now, again, I'm going to say if you haven't taken a free trial, the trial really is free. Okay, go to the home page here at Target View Trades. It's a 3-day trial. It's $25 per week. That's like the cost of a pizza. It's not even a whole tank of gas. This is almost a tank of gas, and that's a whole month. Take the trial and get started if you really want to do this. All right, it could change your life right there. The cost of a pizza. Anyway, that's it. TargetViewTrades.com. All right. So what I wanted to show you in here was the multiple time frame thing. Well, there were a couple things. I wanted to show you. Hang on. There's more questions at the top. After your end, you keep moving the stop to the high of the last bar. The high of the last bar. That's not exactly how I would say I do it, Casey. Now, I've given lots of lessons on this, and it's not really what I want to do in here, but I'll explain it anyway. Every trade that you get into is trying to get somewhere, right? Every trade you get into should be continuing the trend. Every trade you're in is a trend trade, and every trade you get into should be trying to continue the trend. And what that means is, when you get a trade like this, it's trying to get down below this level. When you get a trade like this, it's trying to get below that level. When you get a trade like this, it's trying to get below that level. And it keeps doing that until it doesn't anymore. And when it doesn't anymore, like this was trying to get below this level, when it doesn't anymore, then you should probably consider not taking any more trades in that direction until it does again, or it changes direction. Alright? That's how trends work. Right? That is how trends work. Let me see if I can do this properly. They go up and down and up and down and up and down until they don't go up enough, and then they go down and up and down and up and down and up and down and up and down and up. That's how trends work. Okay. So what this does, and what everything else that I do is going to try to help you do, is get in at the right spot. This is not the same exact stuff that I use in the morning. It doesn't get you in the same places. It doesn't give you as many opportunities, I don't think, as the stuff in the morning. You know, if we did what we do in the morning on a 4 range, you'd have a lot of black arrows. Get you into a lot of places. But in there, we're teaching you how to trade. In here, we're teaching you when to trade. There, we're teaching you how to trade. You're not learning how to trade in here. All right. Now, I say that because you asked me about trailing your stop and how to trail the stop. That is how I trail my stop. When I put one of these on, if I do a mid-trend trade on a 4-tick range on the Russell, I use a 6x20 bracket. Right? That's what I have on my DOM set, a 6x20 bracket for this, for the mid-trend trade. If it's one of these trades right here, one of the red ones or the blue ones, one of the red ones or the blue ones, the stop's going to be a little bit bigger, so a 6x20 doesn't work, but it's usually an 8x20. Okay? And then once I get 4 to 6 ticks in profit, I trail my stop to break even. And then I just keep trailing it after that. All right? Usually it's going to get up there and get pretty darn close to that target. But keep looking at the prior swing high or prior swing low. Make that your first area that price should get to. Okay? Sorry, I'm going into theory here more than I want to. Well, then just showing you what the indicator does. Like right here, we've got this long. It should get up above that, right? When it pulls back, it should pull back to like right here. And the next place it should go would be this high right here when it pulls back. All right? And then when it pulls back again, it should be somewhere up here. Depending how far up it goes, it should be somewhere up here that it pulls back to. And you're going to have a high up here that it's going to be trying to get up to. Okay? That's the way that the markets work. They work that way all the time. So, the larger time frame stuff. Now, you see how we have the colors in the background here? They give you the basic direction that you should be trading, you should be thinking. And they also give you an idea of when things are going to change, right? So we're blue over here, so you're only thinking long. Well, with a larger time frame, you can set it so that it looks like this. Oops, that didn't work out the way I wanted it to at all. Let me put this on a 15 range. All right, I'll put this on a 15 range, and let me go in here and get rid of everything that's turned on. Okay, get rid of everything that's turned on. Oops, I want to buy and sell here. Everything else I want off. Okay, and say okay to that. And now go in here and take this and make that a 0. Take this and make that a 0. Take this, make that a 0, and take this and make that a 0. Bam. Now you have a long-term direction. You see right here? What you see here right now, my friends, is over here we had a bias based on what's going on in this time frame. Over here, if you wanted to just trade in what the long-term direction is telling you, you can just trade in the colors. Okay? Like you see how we have red over here, the long-term direction is red, so you wouldn't be taking any long trades. In here where it was all red, you're only taking short trades. So that began back here at 12:21. Right? So to set that up over here, if you want to do multi-time frames like that, to set that up, you would come in here and get rid of the longs altogether. All right? Because your larger time frame is saying, oops, let me do it this way. Your larger time frame all through here, starting at 12:19, is saying you're only interested in the short trades. So if you're really only interested in the short trades, I mean, you don't have to see the whole thing. You only have to see the edge of that. Okay? If you're really only interested in the short trades, then don't have the long showing at all. Just wait until you get your short trades and take your short trades when you get them. Okay, that was a multi-time frame thing that I wanted to show you. It started here at 12:19, so right in here, only short trades. Bang, 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 right there. I mean, how many in a row do you have right there? This was the one you would have stopped out. Maybe this one, maybe that one stopped out. But every other trade was a winning trade. Right? You would ignore the colors in the background here. You're only taking short trades because in here, the longer term direction was short. It was red that whole time. And right here at 3 o'clock, you finally got a long opportunity in there at 3 o'clock. So in here at 3 o'clock, right in here, you stop looking at shorts and then you start looking at longs. Now it was only long for 6 minutes. So it was like this period right here from 3 o'clock, which started right here, to right there. You might have gotten one long trade right there. Alright, I'll put the longs on and see if you did. You might have gotten one long trade right there. Right? Yep, you did, right there. One stop out long trade. But then went right back to short. Right? So it went right back to short. So if you stopped out on that, you got it back on that. That was a trade that I actually took. I took both of those trades. And I got a break even on this one. I ended up with a break even on this one. This is the one that I stopped out on. Now, if I had it set up like that, then I wouldn't have taken the long trade, and I would have taken the long trade still, and I would have taken the short trade still. But I ended up with a break even on the short trade. I didn't take anything else since then. Or did I? No, I didn't. But that is if you want to trade in one direction. Like right now, it's all red over here in your longer term. So you're not looking at long trades. You're just ignoring the long trades. You would shut the long trades off and wait until you get your next short trade. Okay? And it may be a while before it comes. This may turn back to blue. When it turns back to blue over here, then over here, turn your longs back on, shut your shorts off. You see? How is that for a larger time frame look? You're not looking at any indicators. Still not looking at any indicators. You can see without the indicators what direction you should be trading. You guys see my whole goal here is to keep the decision-making part of it to the very minimum. Because that, I've been doing this for a really long time. I've been trading people for a really long time. And I've been doing it myself for a really long time. And I know where I screw up is when I start to second-guess things. If I just take the trades because I know that they work over time. If I take the trades, consistently doing what I do, then I'm consistently profitable. But if I start saying, no, that one doesn't look good, I don't really like that one. You don't have a plan. You don't have a plan at all. You have to have a plan. A trading plan. A set of rules that you're going to follow. And in here, the rule is, if it says to go long, you go long. If it says to go short, you go short. It's as simple as that. Do I trade using larger time frame direction, or given I am a scalper, I don't? Brian, I typically trade just with the 4-tick range. I was doing this to show you guys how you can do it because I know that a lot of guys do use this. I personally don't. Okay. But I know you can, and a lot of guys do use the larger time frames. I'll say they use the larger time frames to look at it. But this is a better way to look at the larger time frames without looking at any indicators. Okay, because again, it's the decision-making process in your head that screws things up. See, like right here, it just went to blue. So now you start looking for long trades. So you go over here. Oops, not that. You go in here, and you shut off the shorts, and you turn on the longs. Simple as that. See, so now right here, everything's coming together really nicely right here for the long side, right? You have a higher swing, you have your pullback. Remember when this was happening a minute ago, I said it's going to go up here and then it's going to pull back like to here, and then it's going to go up to here and then it's going to pull back and you get another trade. That's what I was saying just a minute ago. If you go back and watch the recording of this later, you'll see that that's what I was saying when it was over here. I think that's what I was saying. But but as far as the trades go, there's, here. watching this on another monitor. So I went long from 35.8 is what I was trying to get in at. 35.9 is what I slipped in at. So I'm going to lock in some profit on this one now. Okay, after that last one I stopped out on. I stopped out 6 ticks on that one before. So now I'm getting that back. And it should pull back. It should pull back to like right about here. Right? 36.1. So it should take me out. I'm going to lock in one more tick because it should pull back. It's in pretty good fashion right here. Now, the morning session is where I teach people how to trade. This just tells you when to trade. Okay? Alright. So, let me go back here. I'm a scalper, so I like to trade what's in front of me, and I get it in, get it done, and that's it. But this was a great trade right here. These mid-trend trades, you have less risk on the mid-trend trades. I really like them. If you have, particularly in a case like this where I just said a minute ago what I thought it was going to do, and it went and did it. Exactly what I thought it was going to do. Once we got up above here, once we got up above right here, we started the trend in the other direction. Remember what I drew a few minutes ago when I had that pen thing, whatever it was, this thing over here. I usually don't draw things using this, but when I drew that thing a few minutes ago, I said up and then down, and that's what just happened, right? And then up, and here's the down part, right? And what's next? Up, right? So this down should probably go right into this area right here, is where it should go, is what I was thinking. 36.123 right in there when it pulls back. No, again, that's theory, and I don't want to get into that. I don't know how to erase that. Is this thing? Is that how I erase it? No, that's an X. I don't know. I guess I can just remove it like that. Yeah, I can remove it like that. Okay. I'm learning here with you. Alright. Does anybody have any questions? I haven't even looked to see who the heck is in here right now. There's a good group of people in here. I want to thank everybody who's here right now for coming, and I'll have this recording today. I'll have it stuck out here. You guys should all join our Telegram channel, and I'll also stick it on the website. It'll be in here on the website. If you go to the homepage here at targetviewtrades.com, go to TV Trades web recordings. This is one we did yesterday for those of you guys that were in that one, and I'll have this one right here today. All right, it'll be right in here today at the top. Again, if you haven't taken the trial with us, you really should. You know, it's dirt cheap to get started. It's free to actually get started, but that's only $25 a week if you want to stick it out and try it out for a week. It's $90 a month after that. I mean, if you can't make $25 a week in this, like I've made more than $25 while we've been having this conversation, way more than $25. I've made like a year's worth. I've done the whole annual while we've been having this conversation. It's there for you again and again and again every day. But the multi-time frame thing, I wanted to show this to you because this is a way that you can use the multi-time frame information without using indicators, without having any indicators to look at. Because if you had something over here, and I know that this is something that people do, you know, they'll throw, like if we put just regular TV trades on over here, like this, you know, you'll be looking at it over here and you'll say, oh, well, the bar is the wrong color, and, you know, and like you had a red bar and a blue background, and so you're not going to think blue anymore. You had a blue bar and a red background, so you're not going to think red anymore. You know, you start making decisions like that, and that's what screws people up. So get rid of all the stuff that's going to change or make you second guess yourself. Okay? Is the 4 range about the same as 1 minute? No, it is not. Range bars have no time element associated to them at all. A 4 range could last, it could last a second, could last a fraction of a second, a bar, or it could last hours. You know, if you trade at like, you know, 1:30 in the morning, when there's not a lot going on, a 4-tick range bar can last a long time. But if you trade at 9:30 in the morning, you know, you could go through 24-tick range bars in a second. It just, now with the open, usually there's a flurry of activity, and it just pops. Now, how far did I say? I thought that was going to pull back down to? Right about there, right? And then it's going to do this whole thing again. It's going to get up to here. That's what it should do. guys follow? So, since we started this, you could have paid for a week there or a month, a week here or a month, depending on how many contracts you have on. It's, you know, in my opinion, there's no reason not to do it. To at least try it. But that's only part of what I was going to. I mean, those of you guys that are in here who are already subscribers, there's something else that I'm working on. That here, I started working on the 24th. So let me put that on. Okay, and we'll shut off this one. Alright. So in here, you know, if you put that on and you have the mid-trend trades showing, right? Now the mid-trend trade isn't going to show anything until you choose long or short to go with it. Okay, so we'll just say buying opportunities mid-trend trade. So it's just going to show the mid-trend trades for the longs and actually the long opportunities. There's something else that I'm working on right now that is going to give you even more opportunity. Alright? Now, I'm going to show it to you. I don't want you to... It's going to be a line on the chart. Alright? But I don't want you to think that you're going to have this line on your chart. I'm just showing it to you so you see the kind of stuff that's, you know, that's going on in the background, really. And it's really not going to show that much. It's got all these mid-trend trades that triggered exactly where they should right here, so it's not really going to be very helpful in this instance. See, this is going up doing exactly what I thought it was going to do. Now it should pull back again down to here. 37.7, right around that area. Okay, that's what you should see here right now. But going back to what I was going to show you, if I turn this on, I go in here and I put this on. There. See that? Now, this is going to give you other opportunities that you wouldn't normally get. Okay. And the mid-trend trades, if I had the shorts on, you might get some mid-trend trades in here, but not all of these are going to show you mid-trend trades. Right? I think these two right here turned into a mid-trend trade. This one I don't think did, but there's more opportunities. Now the thing is, you're not going to have this line on the chart. Again, you're not going to have the line on the chart. And there's plenty of opportunities as it is. You don't really need any more opportunities. But, you know, I make a living trading. And when I create things, it's because I create things that I'm using that are working out for me, and I pass it along to you. And it all works out for me because you guys get to use it, you guys get to work it out and make money with it, but at the same time I'm using it and making money with it. And it helps me to do this kind of stuff in front of people, which I do every day. I mean, every day. So everything that I figure out, once I've really worked things out with it, I bring it forward and I show it to you guys. So I'll show you what it looks like with the lines on. Okay, now this is nothing, any of you guys that have seen the stuff that we do in the morning, this is going to look similar to stuff that we do in the morning, but it's not the same. Okay, it's not the same. I know, I'll show you what you're thinking on top of this, and you'll see. Now, Dwayne, I know you're watching. If you remember way back in Next Gen, back in 2005, something like that. Remember those lines they had there in Next Gen? And those of you guys that are thinking of the stuff in the morning, you're thinking of this. And you'll see it doesn't match up with that either. Okay. It's something completely different, but it's not something that you're going to see on the chart. Alright, I just wanted to show it to you so you understand kind of what this is, what these pullbacks, these arrows are doing. They're coming back to a position that price is likely to bounce off of and likely to move off of. Okay? That's what it's doing. And I'm not going to put lines on the chart. You're not going to be able to duplicate any of those things that I just showed you. That's all stuff that I created. It's all math that I created, and you're not going to be able to duplicate any of that. But the whole idea behind it is for it to come back and bounce off of something. And you don't have to see what it bounces off of. All you need to know is that it's bouncing off of it. It's got something here that's making it go. And, you know, when I was talking about all this stuff here at the end, I'm running out of time here, but when I was talking about all this stuff in here, when I was saying, okay, well, you know, price is going to go up to here, and then it's going to pull back down to here, and it's going to go up to here, and it's going to pull back down to here, it's going to go up to here, it's going to pull back down to here. That's just the way the markets work. They've been working that way forever. And eventually it's not going to put in a higher swing. It's not going to get up above this level. It's doing it right now, but eventually it's not going to. And when it doesn't, it goes sideways for a little while, and then it changes trend, and it'll do it the other way, going down. And so what these things do is they let you know the best spot to get in the trade on the pullback. Right? It's not teaching you how to trade, it's teaching you when to trade. That's what it's doing. Okay. That was a lot of talking. Did I answer all the questions so far? I think. Yeah, it's kind of like what it is, but it's not exactly Rico. And I'm never going to put anything like that on the chart for you guys. I just wanted to give you like a glimpse of what's going on behind the scenes. All right? That's stuff that I'm working on to make everything better for you and for me. You know, over here, you see how this got all blue? And so we're only looking at long trades when that went blue, right? You're not even considering short trades. That's pretty good, isn't it? If you want to do multi-time frame stuff and look at the bigger picture, have the bigger picture over here and say, okay, this is all blue on a bigger picture. I'm only going to be looking at long trades. Bias on, bias off, whatever. You're only going to be looking at long trades. Just shut the shorts off. You know what I mean? Okay, how is HEIKEN ASHI stuff from last week developing? I actually, let me show you what it looks like. Okay, for those of you guys who don't know, I think I have to go in here and go to open this one right here. And then I gotta hit add to chart. It's on version 11. I still only got to put long trades on. I didn't get to do any short trades. Okay, when it loads all the way up, you'll see. And it doesn't do very many long trades, but it only does long trades. So what this was, for those of you guys who don't know, is, you know, when you put indicators on, like let's put on a simple moving average. Okay, let's go to technicals and put on a simple moving average and moving average ribbon. Oh, I didn't mean to do that. Hang on, moving average simple. That's what I meant to do. Okay, let's get rid of the ribbon thing, because that's just going to screw things up. And apparently I named that high. But when you go in here, inputs, you see how this has close, and it also has open high low close divided by 4, high low close divided by 4. And you can do, based on all these different things, is what the formulas work off of that create this moving average, right? And so what I did is I took the formula for the HEIKEN ASHI, which is the close of the bar before the prior bar, which is the midpoint of the prior bar, plus the open high low close, plus the midpoint of the prior bar. I took all that, divided it by 5, and made that my formula for positioning the indicators. All right. So this is based on the HEIKEN ASHI stuff. The HEIKEN ASHI formula is what's triggering the arrows in this. Now, I'm not exactly sure that I left it that way. Let me just go look and see if I left it that way. High plus low plus open high low close divided by 5. I don't think so. I think I changed it. Oh no, this is right. This is the HEIKEN ASHI one. Okay, this is it. It's the high plus the low divided by 5. It's the midpoint of the last bar, the prior bar, plus all that. So that formula is the HEIKEN ASHI formula that's positioning this. I was playing around with some other things, like giving weight to the closes at the top or the closes at the bottom, depending on where it fell based on a bias. If you had the bias on, I was playing around with a bunch of different things because that's how I figure stuff out. And that's, you know, for those of you guys who don't know, I'm always trying to figure stuff out, always trying to make things better, always trying to improve things. Even if it's great, I'm still going to be trying to make it better. I know Dwayne, you know, always says I'm searching for that black cat in the dark that doesn't exist. And I don't want anything that's going to be perfect. I know nothing's going to be perfect, but I want something that's going to be really, really consistently profitable. And and that's what I'm. No, we're there. I mean, we have stuff that's really, really consistently profitable, but I'm always trying to make it better. And you get that when you subscribe to whatever it is that I'm doing. You know, whether it's the stuff that we do in the morning or the stuff that, you know, the TV trades. You get my commitment to constantly making it the best thing that I can. Anyway, I've run out of time, guys. It's 4:01. Am I answering all the questions? Thank you. In the morning, but it's a different thing, Casey. You've been in it in the morning. But with this, I do not. Okay. You guys are welcome. John, you guys are all welcome. Thank you all for coming. I'm going to post this recording. I mean, I don't have to end right now. If you have more questions, I'll answer more questions. I don't have to end right now. But I'm going to post this recording here at Target View Trades. It'll be under TV Trades Web Recordings. It'll be right here at the top. And it'll probably take me a half hour to get it there. Okay? Because I have to put it out on YouTube first to be able to stick it in here. It'll also be on our YouTube channel. You can go to there. If you join, you get access to. I'll send you a link that gives you access to everything. You know, we have YouTube and Facebook and Telegram. It'll give you access to the Telegram channel. You're gonna want to get in the Telegram channel because you can do that. You know, even without joining, you can get in this Telegram channel. Now, I put stuff in here on a regular basis. Well, I try to do it on a regular basis. Get into the Telegram channel if you want to, whether you join or not. And whether you subscribe or not, you should get in there. And the daily ES for the investors, swing traders. Let me show you that in a minute. You are welcome, Rico. I'm not done yet. Dwayne wants me to show everybody the daily ES for swing traders and investors. Let's go to that. We'll go to the daily on the ES. Well, this is the Russell, but still the same thing. Now let me take this off and put it on just your basic TV trades. Let me just take them all off and not just throw on the regular TV trades on this. Alright, this is what it looks like on a daily chart. So the last long it had was right here. Now this only has long set, and this is on the RTYU. We just rolled to that contract. So let me change that to the RTY1. This is the continuous contract. Okay. So in here, this is where you would have gone long. Your stop would have been down here. Yeah, it's a pretty good movement on that. It's just going to show the long trades here because I didn't turn anything else on. And this one right here, your entry would have been here, your stop would have been down here. Okay, and this one right here, your entry would have been here, your stop would have been down here. And this one right here, your entry would have been right there, your stop would have been down here. So we don't have one, we don't have a single one yet that didn't give some profit. You can see these entries are really good. If you're an investor, or if you're, you know, if you trade on a daily chart, you know, it gives you awesome entries. And it's not just futures it gives awesome entries on. Look at Bitcoin. We're not going to look at that on a daily chart. We can look at it on a daily chart, but you see all the same stuff again and again and again. It's giving you good information. Okay, again and again and again. Every market is going to give you good information. This one would have been a stop out right here on Bitcoin, but it works on all time frames. It works on all other things. The dollar value of the move. Well, let's get out of crypto and we'll explain the dollar value of the move. Okay, if I go back here to the RTY, for instance, and look at the RTY on, we'll go back, oops, I don't mean that one, sorry. Look at the RTY 1, there. Okay. And again, we're just looking at the longs, and we'll go back here. Alright, let's say this one right here. Your entry here is 2071.3. So it ran from 2071.3. Now, these are the targets up here, right? So 2167 is the next target up. It's going to be right up here. 2167 is the next target up. So it started here, and it ran from 2071.1 would have been your entry, 2071.1. Wherever that is right there. Okay, 71.1, and it ran all the way up to 2131, 2131 and change. Let's say 2132. Okay, 2132. From 2171 up to 2132. It ran 60 points. 60 points. Now, 1 point on the Russell is 50 bucks, right? 1 point on the Russell is 50 bucks. So it's 50 times 60. So this to this was $3,000. Okay, and this one over here ran, we'll say 87 up to, let's just make it an even number. We'll say 87 to 57. Okay, just to make it nice and even. That ran 70 points. So that's 3,500 bucks. And you know, this is what it is on a daily chart. If you want to trade it on the daily chart, that's what it is on the daily chart. And that's with the Russell. You know, you can do it with other anything really. I mean, you can type in any symbol in here. The NQ. Look at the NQ1. Now this is obviously something that I had running for YouTube. This actually points at the log over here and all that stuff. But the NQ is $5 a tick. So right here, the NQ is 20 bucks a point. So this ran from 195 at the beginning of May up to 374 for 200, just about 200 points. Actually, more than 200 points, almost 300. Right? Was it 175? Let's say 200 up to 369 or 350. So 150 points times 20 bucks a point. That's 3,000 bucks on the NQ. And again, we're just looking at the long trades right here, but you can see again and again and again. It gives great opportunities. On the daily ES chart, hang on. Let's look at the daily ES chart. ES. You're making me go in places I don't normally go. But here's the daily ES chart. Alright, so the ES is $12.50 a tick, or $50 a point. And that ran from, let's just say it ran from here at, we'll say here, give me a nice round number. 25. 225 up to, we'll say 85. Okay. 225 up to 585 for 300 and, do the math for me, 360 points. 360 times, is that right? That's a lot of points. 360 times 50? That seems significant. Did I do that right? I'm trying to take away from it, like rounding up here instead of going down. We'll start here at the top of the bar instead of where it actually closed. We'll start up here at the top of the bar and say 225, and up here at the top of this bar is 588. So 588, let's just say 585. 585 minus 225. Yeah, I was right. 360 times 50. 50 bucks a point. $18,000 in this move right here from May then up to now. That's one contract. Pretty good stuff. And if you look at it on other things like bonds, yeah, Dwayne did the math for me. Thank you. And that's with one contract, 18,000 bucks from the beginning of May till now. And you say, okay, well, what would my stop have been on that? Well, the stop's right here. This right here, this table is generated from that arrow right there. Your stop would have been 58 points. 58 points. So you would have had about a $1,300 stop. Okay. 58 times, actually it's more than that, sorry. 58 points, it'd be about a $3,000 stop. Right? 58 times 50. $2,900 stop. An $18,000 gain. And what's the first target? Because these are all-time highs right here, the only target it could give you was this one right here. So I don't have risk reward turned on this, but if we put the risk reward on, let's see what that says. 2.0, great risk reward on that, and it just got better and better as it went. If I put the mid-trend trade on, I bet you got a trade right here too. If you do that. No, and this is a daily chart. There you go. Okay, you got this one right here. You got your mid-trend trade right in there. This is a daily chart. So you can do whatever you want with it. It works on everything. It works on crypto. It even works on Forex. We have guys in Sweden that are using it in Forex. So it's got pretty much everything you want. Can you draw a trend line on the daily and it shows up on the 4-tick? Yeah, it works on ETFs too. Yeah, let's look at the. I had stuff that I had done yesterday from the QQQ and options yesterday. I'll show you that in a minute. But here's the QQQ with the long trade right here. If you're buying call options on the QQQ, bam, right there you got 200, 300, 400% probably. Right here, same thing. Right here, you would have been buying your call options 20 minutes ago. Right here for tomorrow morning for the open. Back here, call options. And that's the QQQ. Now, the thing that I wanted to show you was from yesterday. Hang on, I put it in Telegram. Where is my Telegram? Here it is. I put it in Telegram yesterday. Okay, so I got this yesterday morning on the QQQ 100 range. At 11:26, we had a sell short condition was met. This was at 11:26. Now, I wasn't really paying that close attention to it yesterday. So I didn't really get all the exact details, but that was at 11:26, and this is an hour and a half later, just about. And this is a QQQ puts. All right. This is a 2-day put that I was looking at, the 479 2-day put. Okay. And at that time, the change, it was up 40%. At that time, it was up 40%. Priced at 327. But it ended the day at 512, up 120%. All right. And that wasn't even the best of it. It got better after that. So if you want to trade options on futures or options on ETFs or options on crypto, this stuff gives you a great opportunity to do that. There's just so many things that you can do with this. And I didn't even get into the alerts part of it. You can set this up so it sends alerts to your phone. Like I showed you the alert that it sent, that alert that I showed you. This right here was also sent to my phone. Right, this is from over here on this side, the screenshot, but it was also sent to my phone. And what it looks like on the phone is this. This was one that came to my phone yesterday, Tuesday, June 25th at 1:18. That's what it looks like on my phone when it gets triggered on my phone. Okay, so there are just tons and tons of opportunities. I can put the ES Daily shorts also. Yeah, sure. Let me go back there. Let's go back to the ES. And the question that you asked, Casey, let's put it on the ES continuous symbol. And daily. We are on a daily. Let's put the shorts on. Short arrows. So let's get rid of the longs. We'll just put the shorts on. And blow it up so you can see all the shorts when they happened. Here's a short right in there. Daily short. Some shorts in here. Now the shorts, clearly we're not going anywhere in here. We're in a pretty bullish market and didn't get a lot of shorts. These didn't go anywhere. So your stop on this would have been right here. And your stop on this would have been right here. Right? So there wasn't a lot of shorting activity in the last year or two. This goes back years on the daily. Yeah, not a lot of shorting activity. I guess the last short that triggered was last year, sometime. Last year, on a daily, the last short that triggered was the 21st of September, back here. Okay, so not a lot of shorting activity in there. When the markets have been as bullish as they have, all-time highs over and over again, you're just not going to get many shorts in the daily chart. In Casey, you had asked, can I draw a trend line on the daily chart and it shows up on the 4-tick? That is kind of, yes, almost zero learning curve. That's right, Dwayne. Dwayne said best product on the market with almost zero learning curve. Now, the ES. Oh no, Casey, you had asked, can I draw a trend line on the daily and it shows up on the 4-tick? Only if it's in viewable range on the 4-tick. Okay, if you draw a trend line on the daily, you know, like this is the ES, and if I draw a trend line here on the ES, to be in the viewable range on the 4-tick, it's going to have to be a really small trend line, like this. Like that. Okay, and now if I change this to a 4-tick, let's go way down here, 4 range, there's your trend line. Okay, if we flatten this out and we bring it up, there's your trend line. It just doesn't look the same from a daily. Okay, and it would have to be a tiny, tiny thing. Like right now, if I draw one here on the 4 range, and then we flip over to the daily, you know, it's got to be a huge trend line on the 4 range to even show up on the daily. Okay, if we flip that to a daily now, there it is on the daily. This little line right here, this vertical line, is what I drew. Right, this was the one that I drew here on the 4, on the daily, that we tried to show on the 4 that was flat. This is the one that I drew on the 4 range. It just shows that it's going from bottom to top because it's all within one day, and it shows that it was on an incline. Basically, is all it shows. Okay, so you can't really. It's not. TradingView is not really made to show that kind of thing. You can have them next to each other. You can have different time frames next to each other if you want to, but they're not really made to show that the way that you just asked for it. Okay. Draw the daily trend line on another screen. That's That's all you have to do. Okay, so you just draw the, have 2 of them going like I had over here, and you can have a daily showing over here if you want to, and draw a trend line on the daily over here if you want to do that. But the whole reason I showed you this stuff was so you don't have to do that. Okay, so you don't have things that you're looking at, because if you had something over here, like I can put a trend line. Well, I don't want to put a trend line, but I can put a simple moving average over here. Let's say, what's a regular moving average I would put on a larger time frame, like a 50 or something like that? I don't do that kind of stuff, so I'm just going to say a simple moving average. Let's say you have a 50 simple moving average, right? Or what's the fib number? 55 is the fib number, right? You put a 55 moving average. Okay, so this is your daily moving average right here. Now you can look at it. You can crunch it up so you see what direction it's going in on your daily. Well, this isn't a daily. This is a 15 range. But if we bump this to a daily, sorry about that. If we bump this to a daily over here, there, like, oh gosh, now it's all messed up again. Here it is. All right, so we bump that to a daily, and again, take all of this stuff off of there. So you're just looking over here to see what direction it's in. Now, when you only trade in that direction, then you have the direction over here. Alright, if that's all you want to do is trade in the direction of the daily, then that's what you'll have. But you're going to have spots in the daily, like right here, there's 2 or 3 days probably, where it's flat. You're not going to get any information from that, so I wouldn't really recommend doing that. Having it so you don't have anything over here to help you, to make you change your mind and make you have indecision is what I'm recommending. Okay, if you're going to use a multi-time frame, use a multi-time frame, but don't leave anything on there that's going to make you second guess what's showing over here. Alright, if you want to trade in one direction over here, trade in one direction. Get rid of the other direction altogether. You don't even have to have the bias line. If over here it's saying go short, then over here look for shorts. And this was on a 15 range, I think, compared to the 4 range over here. So over here it's saying go long. Over here you're just looking for longs then. You're not looking for shorts anymore. Okay. Alright. Alright. That is going to be it. So, if you guys have not taken a trial with us, then you should go here. Go to targetviewtrades.com. It's right here on the home page. Click on this right here. And 25 bucks, really. Which one of you can't afford $25? Don't forget you got to pay the $7 too for the data. But 25 bucks, and that's even, you get a 3-day trial. That is absolutely free. That's free, but it's only 25 bucks after the trial. And then 90 bucks a month if you want to, save yourself 10%. It's 90 bucks a month. Or if you want to save just about 20%, it's $9.97 a year. Okay. TargetViewTrades.com home. This recording is going to be stuck right out here at the top, probably before 5 o'clock, I would say, Eastern Time. It'll probably be up here at the top if you guys want to go and review this. All right? All right. Again, I want to thank everybody for coming. And most of y'all stayed here the whole time. That's good. I'm glad. I hope I answered everybody's questions. If I didn't answer any questions, you can email support@targetviewtrades.com. Support@targetviewtrades.com. Okay, guys? Alright, I'm going to wrap it up here. Thanks for coming, everybody. And Dwayne, I'll be there regular time in the morning. I'm not going to do any of the stuff in the afternoon for the next 2 days. I'll do the morning sessions only for the next 2 days, okay? Alright. Thanks, everybody. We'll see you all. Those of you guys who follow me in the mornings, I'll see you guys all tomorrow morning. And everybody else, you can contact me at that email. Once you contact me through email, I'll send you my phone number. You can text me through my phone number, and then we can talk that way if we need to. All right, that's it, guys. Thank you all for coming, and I will see you all